Why do I trade FVGs with liquidity? Well, it's pretty simple. Fair value gaps leave inefficiency in the market, and when it's unmitigated, then price action usually wants to come back and fill in these gaps. But before I look for a move like that, I need a level of liquidity formed above the fair value gap. Then I need that liquidity to have a break of structure, and then price action can come down, and then I will only take an entry if I see my confirmation. And then that's it. It might sound confusing at the moment, but after watching this whole video, you'll learn exactly on how do I find my fair value gaps, how do I find my liquidity taken out its own high as a break of structure, small bonuses before I decide to even look at the trade, my entry confirmation, then putting it all together as a full step-by-step checklist. Then I'll show you two examples, and then the most valuable one is a backtesting session. So without wasting any more time, I'd say let's get right into it. Most likely you already know what a fair value gap is, but if you don't, let me give you a quick explanation. So what I look for is a strong push in one direction. As you can see here, we had a strong push to the upside, and this is where I look for my fair value gaps. These are inefficiencies in the market, so this means there was a lot of buyers in the market and there was no sellers. So if price action wants to come back, it just wants to fill in these leftover orders. And here you have a bearish example. As you can see, we had a massive push to the downside, and we left a lot of gaps where price action wants to come back and fill in these orders. So that's basically it. Now let me explain exactly to what fair value gaps I usually like to take, what fair value gaps I don't like to take. So this here is going to be a valid setup. I know what's the outcome of this, but let's see. Let's explain it. So first of all, what I like about this fair value gap right here is that it is the most bottom fair value gap. That is very, very important to this strategy as well. As you can see in this example, you got 1, 2, 3, 4 fair value gaps, but the best one is always the one at the top. For bearish fair value gap example, and for a bullish fair value gap example, it is obviously the bottom one. But before I look for a fair value gap, I need a level of liquidity, then a break of structure. I'll explain those later. But right now, I just want to explain the quality of fair value gaps. You can see we came back into this area, and we also gave a reaction, and we won off this fair value gap as well. Now, if we gave a reaction like this, just like here, I would probably ignore the trade. It doesn't make it invalid, but I'll probably ignore the trade. The reason for that is because this FVG is large and it yet has not tapped into this resistance, and it has such a likelihood of creating a fake out coming into this area and then moving up. But in this case, it did not give a reaction. What it did, it came straight to this resistance and then it reacted off that. So what I want to say with this is that resistance behind your fair value gaps are very, very good, but it could also be a con if you react before tapping into the resistance. Here I have an resistance as well. As you can see, this here is your resistance. If price action comes up, right, creates my level of liquidity, takes out the liquidity, then comes back down, back up, sorry, my bad, and then give us a reaction. It is okay to enter on this, but it does decrease the chances of this winning. It has a high chance of creating a fake out, coming to this resistance, and then reacting off it. So the thing I really like to see is price action not creating this first reaction. Instead, it comes straight up, tapping into resistance, and then that's what I look to take my entry. So resistance is very important behind the fair value gap. Second thing is, like I've said before, is bottom and top fair value gaps. As you can see, I have another example right here. Oh, my bad. I have another example right here. This fair value gap is the bottom of everything. And the reason it's the bottom, obviously, these are not my FVGs because these are tapped. I only look for untapped fair value gaps. Let me draw up a few examples so you can get the idea of what is a tapped and what is a untapped. This here is untapped. This here is, well, obviously tapped over here, but if I mark it up like this, it is not tapped. Then, for example, this here is tapped, and this is not valid for my strategy because I need a level of liquidity. Then, for example, these ones are all unmitigated. This one here is already tapped. As you can see, price action has already tapped into this fair value gap. This one here is tapped as well. Well, you can already see which ones are tapped or not. So this was a little explanation to what is a untapped and what is a tapped fair value gap. But back to the point, what I wanted to say is I look for bottom fair value gaps. Now, this here, you can call it a bottom. even though we have a lot of fair value gaps all the way down over here, but this is a very significant move. You can see this is very far away. So this is okay. This you can call a bottom fair value gap. Now it doesn't make it invalid if I take one over here. Obviously it doesn't make it invalid. Now this trade is slightly like valid for my strategy. It's not very clean though. I can explain later, but it's not very clean. But this one is beautiful. As you can see, we don't have resistance behind of it. Doesn't make it invalid, but it is a bottom zone. So that's really nice. Now, a few quick confluences I can give you as well. Now, remember this, you don't have to use anything. All right. You can keep this strategy as simple as possible by just looking at some confluences at what fair value gaps are the best and what are not. But what you can do if you completely want to master this, if you just want to get some extra confluences, is use the Fibonacci tool to identify a good fair value gap. Now this here is not good. And this golden zone here, this is the best. As you can see, price action tapped right into it and then moved up. And you can also use the volume profile. You can see where is the most volume. In this case, this was not good, but I usually don't do it like this. I usually take it from the previous day, from the start of the previous day to where I take my entry. And when the point of control is in my direction, that means it's good. So that's basically it. And you can also use it to see how much volume was traded at your fair value gap. So those were two quick confluences, but another confluence you can use is having a inverse fair value gap. Quickly, I just want to say once again that you don't have to use all of these. You can keep this strategy as simple as possible. I just want to give you some just a lot of advice I could give. So in this example, it isn't very significant, but you have a inverse FVG right behind your initial fair value gap. And this increases the chance of it winning as well. Another thing is having consolidation behind your FVG. This example, it didn't, but this means there's a lot of volume behind the FVG, which also is really good. And price action usually likes to react from these areas. In this example, you don't have an inverse fair value gap, but you have a nice level of resistance. And also a very small confluence as well is to use an order block or basically a demand area as well. You can see you have an order block right here. Again, you don't have to learn these things. These are just some extra confluences I sometimes look for. All right. And that's basically it. That's all I look for fair value gaps, basically. Now, quick few things I want to say as well is that I don't usually look for massive FEGs just like this unless it gives a reaction from some kind of resistance. And usually sometimes I do actually look for very small fair value gaps as well if it gives a good reaction, and if it doesn't have like a fair value gap below it, then I sometimes do look for very small FEGs just like this one because they do tend to give good wins. Anyways, this will be it for the fair value gaps. Let's get right into liquidity now. First of all, why do I even use liquidity? Why can't I just trade fair value gaps? Well, you must already know as a trader that liquidity is one of the most important concepts. All right. This is literally what makes the market move. All right. Liquidity, it always draws to liquidity. If you've got liquidity right here, it always wants to draw into it. So in this example, this here is my level of liquidity. Now, what price action does, it wants to come take out this liquidity, sweep this liquidity, and then give a reaction from this fair value gap, and then it can move to the upside. Now, there's a lot of stuff you need to know about liquidity, but I'm trying to keep this video more of a beginner friendly. Otherwise, if I were to explain everything about it, it might take me a few hours because it goes a lot in depth, but you can always keep it as simple as possible. So 2 rules to liquidity is that the distance does not matter, and also the size of it does not matter as well. Now, yes, it does decrease the chances of the fair value gap winning, but it doesn't really matter. Of course, if you have a setup like this here is your liquidity, then it's obviously not good. But I've seen, logically, it doesn't make any sense, obviously, because that's not a liquidity sweep, but I've backtested a lot. All right, I just want to say I backtested all of thousands of trades, and I know that small liquidity usually doesn't. Okay, I've got an example, actually, a trade that just won a few days ago. Right here, you can see this here is not my level of liquidity. I just want to explain that as well. The candle that is already tapped from the fair value gap is not what I call my liquidity. So in this example, this here is my liquidity. As you can see, it's just one candle. Now, yes, this doesn't really go into the sweep of liquidity, but this here is valid for me. Now, personally, it doesn't obviously make really much sense, if I'm being honest, saying that, there's liquidity, then it sweeps that liquidity and draw on liquidity if you have a level like this. I do get you, but in terms of backtesting, the data shows it. Data shows it that these FEGs or these FEGs with having liquidity like this do tend to work. And you have another trade right here. Bonuses to this, as you can see. Let me just delete this real quick. We are bullish. Now, what I don't like about this, I obviously did not take it because this is midnight to me. We have a few fair value gaps below, but this here is nice as well because liquidity is the closest. We get a good reaction and there's nothing really else to say about it. We do have a lot of resistance behind as well. It didn't initially tap it. It doesn't have to come extremely, extremely close, but this here is almost like the same area. It doesn't have to tap it perfectly. Now, I do like it when it does, but this here is an okay trade as well. Actually, Australian dollar has been doing really good recently. As you can see, we had another setup right here and stuff like that. So minimum size for liquidity is one candle, so obviously. So if you don't have any candles, that just doesn't make any sense. So it's one candle and there's no maximum size for liquidity. It can be as big as possible, but it just needs to be unmitigated from the fair value gap. You can see it's not allowed to tap. So for example, this one here, for other pairs, this is invalid, but for pairs like Euro FX, crude oil, and Australian dollar, these here are valid. Now I'm still looking into it, so don't take this as guaranteed, but these here are valid. These are like tapped like this. But for other pairs, this is considered liquidity being tapped, and I would not take a look for a trade like this. So yeah, basically, I think that'll be it for liquidity. I now want to explain what are breakout structures of that liquidity, because that liquidity is not valid unless it takes out its own low or its own high. Okay, actually, I just found a few examples here. What a crazy time. Anyways, you can see, let me just delete the setups to get it out the way. We had a fair value gap right here, very, very clean. Down here at the bottom, we do have some resistance behind, as you can see right here, just like this, and so on and so on. Now, this here is our liquidity, this here is not. What I mean by it taking out its own high, and why do I actually use this? Now, if price action used to do something like this, oh, my bad. If it used to do something like this, and then make this, and then fail to break the high, this high, I would not take the trade because it doesn't confirm the trends. All right, this is extremely important. If you do not see this, it means it is completely invalid. So as you can see here, this is your liquidity, and then this is your breaker structure to the upside, it taking out its own high. Right here, as you can see as well, this here is your level of liquidity. This is not valid unless it takes out this low. Now this trade is valid, and now you can trade the trade. Now, it does not matter if it does take it out with the wick or with the body. Okay, this does not matter. You can see right here, this here is your level of liquidity, and it took out the body from here, and then it took out from here. You can call it a liquidity sweep, but again, with backtesting, it tends to work out extremely well. Let me see if I got any other examples. For example, another trade right here. This is very nice. You've got a beautiful inverse fair value gap right behind of it. It's the bottom fair value gap. If you don't take these in terms of this move, it's the bottom. And you can see right here, breaker structure. Then this is your main level of liquidity. This here, if this was your main level of liquidity, it would not be valid because it failed to break this high. And as you can see right here, this trade is even valid. Yeah, this is even valid as well, because you can see this is our level of liquidity. Now, this is obviously not something I look for. It looks absolutely cooked, but this is your breaker structure of that liquidity, and then that you can call a breaker structure of that liquidity. Let me show you a few more examples. Let me just scroll if I can find some trades. Okay, I got another example here. This is beautiful. This is a beautiful level of liquidity. You can see we have a perfect level of a fair value gap. Then we had a level of liquidity. Then we had a breaker structure of that liquidity. If it does something like this, fail to break the low, then come to the fair value gap, it's not valid. It needs to take out its own low. And we did sweep the liquidity already, as you can see here, but this is okay because this is not a significant sweep. If it does something like this, sweeps it, comes right here, fails to break the low, and then comes to the FEG, that's definitely not something I'd look for. Let me see if I can find another example. Here we actually do have a loss. Now, I do not like to say, obviously, in terms of all of these winners, I like to take them. But this is a good example, which I'm going to go over later, is that this reaction is not clean at all because it took out the previous high at a lower time frame. This is most likely a liquidity sweep, had a massive upper wick, and then closed all the way here. But most likely, this still would have been a loser because after all this reaction, it gave another reaction after this candle, and then I would have entered right here. I usually don't take re-entries. I mean, this is not really a re-entry, but it is a clean setup, and I think it would be worth doing it. Now, I definitely do not like us sweeping the previous liquidity like that, but it's okay. All the other factors do come nicely into this. So, as you can see, back to the liquidity part. Here's your liquidity. It's 2 candles. Here's your breaker structure. If it did something like this, I would not take the trade. All right, it needs to take out its own high. No matter if it's with the wick, no matter if it's with the body, it just needs to take out its own high. And I also want to say that it is better if it does take out the high with the breaker structure as with the body, just like this, then that is nice. But if it does take out the high with the wick, it doesn't mean the trade is invalid, but it does decrease the chance of the trade. So you have another example right here. Here's your level of liquidity. If this did something like this, tapped into this, then took out the low and then come back up, as not valid. I need it to be unmitigated from the zone, give a breaker structure. Unfortunately, I would not take this trade. As you can see, we did create a nice level of liquidity, but then we came here, we created another level of liquidity, which failed to break the low and also failed to break this low. So this already means that there's a lot of bullish indication in the market. I think this is a break-even trade. As you can see, it's a massive reaction. I'm going to explain my entry model later as well. Here's another trade that is invalid. You can see we had a fair value gap, a level of liquidity, but we failed to break this low. Now, why did I say not this low? Because this is the low that created this liquidity. Now, if this was our liquidity, then this is the low we need to break. But then in this case, this is our liquidity, and then this is the low we need to break because this is the low that created that liquidity. All right, it is confusing at the moment, but to be honest, I would still not take this trade even if we took out this low, because I do like to see usually if we do take out the major low, and then that would be nice. But anyways, unfortunately, I hope I'm not overwhelming you too much, but that's into liquidity. I think next topic is going to be everything I want to look for, like small bonuses I like to see before I actually look to even take an entry. So I'm not going to even cut the video. I'm just going to go straight into it. So basically what I don't like to see before looking at a trade is, most importantly, trend. I'm just going to say off the bat. But the second thing is badge structure coming back to the fair value gap. So as you can see here, if we do have massive push down, liquidity, breaker structure of that liquidity, and then we create move like this, and then we come into the fair value gap. That means there's bullish market structure, and that is not nice. I do not like to see it. And obviously, of course, if you do consolidate before tapping into the zone like this as well, this is not good as well. It can do something like this, consolidate, and then strong push to the fair value gap. This is okay as well, but I do not like to see right before the fair value gap. In this case, it did make one small low, one like this, and then move like that, because that also increases the chance of having a fake out. It does increase the chance of having a fake out. Anyways, what else do I look for before actually looking for the trade? Obviously, it is really that simple. Like, I might be overcomplicating things in this video, to be honest, at the moment, but it is truly that simple. I do like to see a nice level of liquidity. I can actually show the live markets, the trades I've been looking at recently, which trades I would have avoided, which trades I did actually take. So for example, this trade right here, it's not bad. I did avoid this though, because like in this example, I avoided it because the volume profile was literally right below the FVG, just like this. And it did actually create a kind of a fake out, came back down, but then it failed, and then it came all the way down over here. So that's the reason I did avoid this trade. Did I even know this was I did not take this trade because it was a bit too early for me, as you can see here. This is a trade I actually did take. Now, I don't really like I did take it, but one thing I don't like about it is that we have a lot of fair value gaps right below, and we also have this fair value gap. If we did tap into this, that would be perfectly nice, because we do have an order block here, and we do have resistance behind. But in terms of why I took this was because I'm also still testing the strategy. I mean, I am still testing the strategy, but I did take this. I actually took it on my live account, and it was nice. So I did not take it on the funded account. So basically, yeah, I did. Yeah, I did actually. No, my 153 wasn't here. I did actually close right here. So the reason I closed over here was because a new 4-hour candle opened up and it had not created a lower wick. So basically, as you can see, it created a lower wick and then it came back up. Well, I still would have profited, but yeah, now I got an idea to what I wanted to say is why to never like a few more confluences before I actually look for a trade is if it's at like a new session, for example, 10 a.m. Well, it always depends on your time, but if it's before new session and you take an entry, has a very high chance of sweeping liquidity before. In this example, it did sweep liquidity, but luckily my stop loss was, below that, below this, so I did not get stopped out, and that's it. So that's one confluence, but one very important confluence as well is trading before a new higher time frame candle. So, for example, if we work here and the next candle, not in this case, but if the next candle were to be a 4-hour and your stop loss is like literally like this, it has a very high chance of just stopping you out and then moving in your direction, because the higher time frame wants to create a lower wick before moving in your direction. So be cautious of that as well. And I think that's about it, if I'm being honest. So now let's go into the entry confirmation. You might be thinking, why am I always putting entry confirmations right here? Now, a few things what I want to say is that price action is allowed to go through the fair value gap, and it is also allowed to close inside the fair value gap. But what it's not allowed to do is close below the fair value gap. That's the only thing what I want to see. It's not allowed to close below the fair value gap. And for a bullish example, I need to see a bullish close. So I made this very simple. I had a lot of entry models. I've been testing a lot of entry models, but I believe this one is the most simple. So if price action taps into my FVG, I just put a timer for, actually I have an app for that. If you want to, it's time or something like that, some app like that. So basically, because I sometimes do forget. But anyways, yeah, if I just put that alert and then it gives me alert 3 minutes before a new 15-minute candle opening. And then if it's bullish, then I enter on that. On a bullish example, if it closes bullish, I enter on that, unless it creates a massive upper wick or it's very, very small. So in this case, as you can see, it's okay. It's a very strong bullish example. And unfortunately, stop loss is a bit large, but it was okay for me in this situation. Yes, stop loss was a bit large in this example. So basically, let me try to find a bearish example. Actually, maybe I got some over here. Well, let me explain these. So in this example, as you can see, we had a very small bullish candle. I'll not enter on that. I'll enter on the next candle because this is not yet a strong close. Just enter like that. Target 1 to 3. I think I already said that. Always target 1 to 3 restored ratio with a breaking level at a 1 to 1.5. And that's what I look for. In this example, it was a loss, actually. You can see it was a completely valid loss, actually. No like bad timing, anything. You just have stop loss slightly below. As you can see, I always have my stop loss just slightly below. Not like too crazy, not too, just simple like that. And here, a bullish close, just enter on that. And it's that simple. In this example, again, just, enter on the bullish close. This is a nice bullish close. Sometimes if it does not create an upper wick, now for, again, Australian dollar, crude oil, and Euro FX, it's okay. But for other pairs, if it doesn't create an upper wick, or if it doesn't create a lower wick, well, most likely it would obviously create a lower wick, unless it did actually, give a reaction inside the fair value gap. That is not good as well. That is not really that good. Let me try to find a few more examples. I actually had another loss up here. This is the bearish example. You can see I would enter right here on this first bearish close, stop loss slightly above, and that's about it. So yeah, in this example, this is actually a perfect example. Actually, yeah, no, this is a break-even trade, I believe. Nah, it came really close to the break-even level. But in this example, you can see 5 p.m. That's when a new 4-hour candle opens up. It made that upper wick and then it moved in your direction. So that's basically it, my entry confirmation. I've been making this video a bit confusing, I know, but I'm just trying to keep this valuable as possible. I've actually decided a lot, should I start making my YouTube channel entertaining as possible, fun way to learn. But I really thought about it, and I think this is the best way to do videos. because I already know most of you people who, don't really care have already clicked off the video. But why would I try to make this as entertaining as possible if you're just trying to learn? So basically, yeah, that's all I have to say in terms of the basics. So now let's go into the most valuable part. Is well, not yet, but let's just put everything together. I'll show you a few examples. Then let's get into. I'll show you a few more examples, and then we'll go into backtesting. That's what I've been wanting to do the whole time because that's the most valuable one. You can see me literally look at trades live, and then we'll go from there. All right, so now the backtesting, one of the most valuable parts of this video. I'm not going to do it like extremely slow and show you everything because this video is mostly just giving value and teaching you guys. If you actually want a backtesting session, you can go watch a video on it because I made a 3-hour video on it. Well, I obviously cut it down slower, but let's do a random pair like, I don't know, crude oil. Let's do a random time, start new, random bar, just a random bar like that, just to keep it legit. 2024, I mean, I already got some trades right here. Let me just delete the ones I've got because I have not, all right, just hopefully it's not that dead, that only the trades are all the way over here. But let's delete this. Already showing some really good price action. As you can see, we will win here, a 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 win here. Holy damn, a win here, a win here. Oh my days. A win here, a win here, a win here, a win here, a win. Oh my god, what is this? There's so many wins. A win, another win over here, another win over here. I did not plan this, I promise. Okay, this might have been a break even. Another win over here. Another win over here, another win over here, another win over here. Oh my, wow. Another win over here, another win. I literally promise you right now. Actually, yeah, this might have been a first loss. Yeah, I don't know what the hell. Okay, there you go. We got 2 losses right here. Okay, there you go. I was about to say, like, what the hell is going on? Oh, okay, yeah, let's just continue from here. I haven't backed to this for a very long time, so let's just start from here. Anyways, we actually did give a win here, but it's not something I look for. Just looking at the breaker structure, like, what is this? This is like very weird. So that's not something I'd look for. And I also think we actually gave a loss here, just above this FEG. Now let's just analyze this a little bit. We got a new 4-hour candle opening. We just made it that. I might have waited for the next candle, just like here. This is not very strong. Could have waited for the next candle flip because we also had this order block right above it, which we did not tap. Actually, no, we did actually tap that. Yeah, sure. This is a clean trade. So this is a first loss actually. So yeah, we got one trade, one win I avoided, probably break even anyways, and a loss I took. So right now we got 1 loss. I'm not gonna keep this extremely long. Like I said, this video is not based on backtesting, but I'm trying to keep this as valuable as possible. We actually gave another win, or like, actually no, I would have avoided it. Well, obviously this is not very clean. We got lots of fair value gaps below. I would definitely not like enter off of here. Looking at how massive the upper wick is, this is like a obvious, this might have won though. Like if you put stop loss, well, if you were to take this somehow, I mean, I was obviously not taking it, looking at the reaction and looking where the fair value gap is and so on and so on. But it probably would have been something like this, just stop you out like that. And of course, next candle is a new 4-hour as well. So this is why I said before to be cautious of the new 4-hour candles, because it could do exactly like this. But yeah, this is not even worth putting here. So I'm going to delete that. Just so you know, if I haven't said that before, then these trades are even tapped as well. You can see this is already tapped. Now, just a disclaimer, or like just a quick tip, if you're watching this video so far, I might make a rule on this, that these are allowed to be tapped. If like, well, I'm not going to go over in depth on it, but I might make some rule on it. But right now, just want to say just quickly that these are invalid. It has to be unmitigated, like completely unmitigated. So just want to say that. Had a setup here, but not something I'd look for because we are too bullish. We need a bigger retracement, and this is a very massive reaction. We do have this very nice move to correct, but not something I'd look for definitely, because too big stop loss, and that means risk to reward is going to be very high because I always go for 1 to 3 no matter what, and obviously before news close and stuff like that, but not something I'd look for. Let's see if it did win or lose. All right, so it definitely did win, but not something I look for. Like I said, I'm gonna mark it actually here. I'm gonna mark it out for myself in the future, but another setup here, but you already know the answer to that. Another setup here, but again, like looking out, like if it was an A plus setup, I would have entered on this very small bullish candle, but this here is not A plus. First of all, we had a massive push down. We are disrespecting bullish fair value gaps. This liquidity is very weird as well. Liquidity right here failed to break the highs, swept all these liquidities right here. So not something I would look for, especially looking at how small the reaction was as well. All right, I just want to do this real quick because this is on my mind. I want to see, like, was there actually just so many W's? So let me just go back and see how, like, were there actually any? Maybe I backed this a very long time ago and I just marked up the winners. So okay, never mind. It's another win over here. I just want to see, was this actually like that crazy that we had like literally like 20 wins in a row? So I'm trying to look for any trades I missed. If you see something, yeah, I don't know. I mean, you can't really say anything, but if you do see some like a loss anywhere, just, I don't know, shout something. So I'm just trying to look for, I mean, looking at right now, I think this was this was insane. Just win after win, isn't like the literally wins that I missed, like this one right here. But yeah, I don't see any losses, if I'm being honest. This was another win over here. Yeah, I guess this was just an insane time. Yeah, so yeah, this is just stuck on my mind. So I just wanted to quickly check in. I think yeah, there's nothing wrong. It's just W's after W's after W's. So I'm just gonna go back into backtesting. We did give a reaction from this FVG, but yeah, I'm not looking at that. Looking at the bullish structure we made coming to the zone, it's not something I'd look for. And we also had a setup here, but again, it's just not enough. Like too big stop loss and not good level of liquidity. I mean, it is good, like okay, but it just doesn't look. It just looks like this basically. It doesn't really look like normal price action. So I will not take the trade. All right, so like I said before, I'm not trying to keep this video as like long as possible. So I'll just be practicing until I like take a losing trade. So the next losing trade, I'll be ending the video right there. Should we give a normal setup right here? I definitely do. Okay, this is more okay, but like I said before, that if you do not create an upper wick giving a reaction, I will not take the trade. Now this does vary depending on the time. As you can see here, this is just a new 50-minute candle. So this is just a new 50-minute candle. But if it was a new 1 hour candle that did not create an upper wick just like that, that's not something I'd look for. But this here is okay. It's not even that bad. You can see we're very bearish. We just took out the last low right here. This is a order block as well, reacting from this order block, reacting from this resistance, massive inverse fair value gap as well. It's not that bad. Let's see if TP was here. Okay, yeah, this was a break-even trade. I would be counting it. So it obviously wasn't a loss or anything. So I'll keep on backtesting until I take my first losing trade. All right, so we had another setup quickly right here. I did already see how it played out, just so you know. But I would not enter on this. I would probably enter on this. Now, I won't take this trade. I'm just like, you know, analyzing it normally. The reason I won't take this trade is because we don't really have much bullish confirmation. You can see it's just basically here bearish consolidation. I don't even know if that's a word, but we are kind of bearish and we are also kind of consolidating right now. So it does have potential to move out of this consolidation move, but it doesn't have a high probability. So this is not something I'd look for. Although it did win, but like I said before, that's not something I'd look for. Oh, by the way, if you haven't already, then, join the free Discord. I've also just created a free course plus a free trading journal. So if you want to get that, I've linked it down in the description as well. So yeah, go check out the description. I got Instagram there, Discord right there. Hit me up. I don't know. All right. So unfortunately, I think I've already got us. I had it marked up over here. I don't know why. Actually, I do have a few setups marked up. Let me just delete these real quick. I don't know if this trade did win or lose, if it even is valid. Let's just see. I mean, yeah. No, I would not take the trade. I mean, we've got massive fair value gaps below, and yeah, this is just, it's okay, but I do like liquidity not taken out. We just formed multiple levels of liquidity, taking out its own high, good movement down to the zone. Let's see off the reaction as well. Okay, reaction is great, but not something I'd look for. And it most likely won because, okay, never mind. It was probably a break-even trade. So yeah, that's not yet a loss. So I'll continuing to backtest. All right, we did give a setup here. Again, too big of stop loss. We failed to break the recent low. We swept liquidity while not taking out the recent low. So yeah, this is not something I'll definitely look for. And let's see if it wins or loses. Well, that's probably break even. I don't know. Yeah, that's probably break even anyways. What the hell is this? Just get that out of the way. We did have a setup here, but not something I look for. Once again, first of all, this is a swap hour fair value gap, so I don't usually like those. Not like, okay, liquidity, but yeah. I mean, nothing really much to say about it. If you watch the whole video, then you already know the reason why. It's just subconsciously as well. It just doesn't look good, or like visually and stuff like that. Because, I've backtested over 1,000 trades and I've just got it at the back of my mind. Subconsciously, I already know which trades are basically going to win or not. Obviously, I can't guarantee it, but I have always a good idea. Had another setup here. Again, not enough bullish confirmation, so I will not be taking that. A lot of trades, there's been a lot of trades, well, decent amount, not a lot, but a lot that I have avoided. So hopefully we can start picking up some actual trades. I mean, let me just delete these real quick. So I've got them everywhere, right? Yeah, let me just quickly delete these. Yeah, let's continue from here. Another setup here. Actually, crude oil, our backtest 2025. I mean, crude oil definitely does like to do this a lot, where it literally just, just wins off the worst setups ever. I mean, you already see the proof before as well. It's just winning off every setup basically. All right, so we gave a setup. Now this is the first time I actually have not seen the outcome, so I went a bit slower. Again, not a very nice trade, but since all the previous price action, let's just take the trade. You can see we're just winning off every single zone. You need to connect with the market. So let's take this trade. Very clean in terms of we're being very bearish. So let's see how this trade plays out. So I believe, hopefully it's not a loss, because I don't want to end the video yet. Okay, it was a loss. So unfortunately, I'm going to have to end the video here. Yeah, so peace out and love, bro.